Hello traders, this is Alex with the StockMatrix program. Today is May 10th. It's about 8 in the morning on a Saturday. So we're gonna get started here. This is my X account. It's CBOT Man 33. I try to post all the trades there. Sometimes I don't do a video. So, and you can see, plus some other stuff. My old commodity routes still, uh, I like to keep track of those, and I got people follow me on that. Let's go now to the portfolio. This is on bar chart, which you can pay for their service. It's really a pretty good service. I use it a lot. Anyway, here is again, just kind of once we kind of spun off the lows, the last few trades were some of these I rolled down. Amazon was a roll down, so again the loss looks worse than it really was. Let me go down. Yeah, we made 3,500 on the roll down on Amazon, and we gave back 831, right? So again, part of the management, you run out of time. These options have a time limit, so I just have kind of strict rules that I follow. Simple but strict. 2 weeks prior to you're out, you roll to the next one. Anyway, so this is you can pause this and look at it here and there, right? So now let's go to the actual statistical page to the matrix, the stock matrix. One other thing, this 225 is a big year, right? Now that's 45 squared or the square root of 2025 is 45, right? So again, this is important. The last time we had a year that was squared was 1936, and we know how important that was. So again, I find it pretty fascinating. Again, I like these 45s. It's a WD Gann thing. So is the statistical part, right? These are the annuals. I keep track of these. I actually trade these. A little different than the system, but it's important to know. Like Apple's got a big day coming up, Monday, maybe Friday, right? But anyway, you're 135 days, right here, 135, and you have some annuals from 2005 and 2016. Tesla, Adobe, IBM, and JP Morgan. And maybe Coinbase, right? That's kind of a Tuesday, I think. Coinbase is interesting because of the zones that it's in. 1485 was actually the 45, so that came in on Thursday, I believe. The next zone on the statistical page is the 12th, which is kind of a Monday. And it actually, 1,400, 1,600 hours, that's close to the close. So this full moon would be important to me. They're all important, right? But it just makes it a little more interesting, right? Near the close. So, but I'm doing this update a day too soon, but I won't be able to do it Monday. So we'll just consider it a weekend update, I guess. So anyway, you can look at this. Again, it's kind of all pretty standard on what we do. Let's move to the charts. NVDA, NVIDIA. You can see we're we broke out. We're above the 1-to-1 trend line, and I believe we're above all of those trend lines. So pretty important, right? Here was our stop. Now we're stops down here. Now we're long. Pretty interesting. Here is the daily chart on NVIDIA. You can see we had some timing in here. This might get moved to up here again. Don't know for sure. It wasn't a real volume power play here. So, but we're up against the solar eclipse, the previous solar eclipse. So that was kind of the resistance. So we're caught in this channel of the eclipses so far. I'm a little bearish and below it, and I'm kind of friendly above it. And this is also the downtrend line, which is not mathematical. So, but it's still important. It's good. We hit it twice. Well, twice we hit it. So pretty important to me that this one, if you're a bear, doesn't get violated by much. You can go above it a little bit, but again, it's starting to get a little heavy here. It looks like this, and this is really pretty slow. History. When you go back and look at some of the bear market recoveries, bears turning into bulls, this is much faster. So I'm a little curious to see how we're going to turn out in the thing, 2 weeks down the road. Moving on to the next one, Meta. Again, the bull of bulls to the bear of bears. Again, we got short here, and we got stopped out here. So all right, profit. Now our stops are down here, which is quite a bit. That's quite a hefty risk, and it'll stay there even past Monday right here. This is where it'll move to next week. So again, still going to be a pretty good risk on the trade, and not terribly manageable. Now after that, then we get past another week, a moon period, then the stops will get moved to here. Now that's more manageable. But you know how it is. You got to take what you get. You can see we had kind of a soft close on Meta. So Friday was kind of a weak stick. 22 days over from this April 7th. Now these are all the charts will be pretty the same. There's a few that had April 8th as a low and 9th. But it was a high. So now the next sequence is the 33, which is half of the complete matrix, which is 66, right? So anyway, that which will come in on May 23rd. Now this one, since it made a bear trap at a lower low here on the 21st, that one, 17 market days, comes in on May 14th. So we got pretty interesting development across the board on. Moving on to Coke, which is KO, the symbol. We did make a new high, kind of a what I call a diamond pattern, right? You got your, now we haven't completed it yet, but it's good enough for the shape right now. Those you don't get too often, and usually you go with them, right? Either down or up. So right now, here's the 1-to-1 coming up. We are kind of riding that. This is the 1-to-1 off this low, which is kind of important. So yeah, and our stop got moved up to here, so we're manageable for sure. We're in the realm of potentially getting knocked out Monday or Tuesday or something, and actually short. So kind of, so you can see it had a good market to the downside, and then it spun. Again, if you consider all markets are a zero-sum game, in my opinion. So if you trade them long enough without any system, you make a good lick, and then you get chopped to death, right? That's, most systems are a zero-sum game. So the options give you a little advantage, because again, whether you're trading a moving average, a stochastic, I mean, I've traded them all back in my 4 decades of trading. They all seem to be a zero-sum game. The advantage that I have with the StockMatrix program is a simple algorithm. It's not complex. So, 3-box deal, right? Okay. So you make a big wad on these big moves. We made a good lick on the up, and now you're giving some back. That's just a classic situation. Let's go to the daily chart on Coke. You can see 17 market days over from the high comes in. Also, we have an annular on the 15th. So, but it's just heavy. Wednesday was kind of the high on timing, which was the low, the 7th, right? If you listen to my last video, I talked about the 7th being important. Well, it was this current May 7th, right? Now June 7th will be important too if this holds. So I'd love bear traps in some of these so I can trade them on my other deal. But just heavy, right? Again, I think it's overvalued up here the way it looks to me, and I'm not a fundamental guy. I don't know what the dividends or nothing are, but I do believe it's just acts heavy, like it's overvalued, maybe a little undervalued in the mid 60s, and that's how it's going to trade. Now Google, GOOG. Now you can also trade the GOOGL. A lot of the data comes from Goog with an L because it goes back further and it's a little more active. So I think all these zones are from the GOOGL. So, which I have posted here. But again, they're not many annuals until you get to the first week of June. So nothing really there. We got, just you can see, it's just not flying up like, and normally we'd be up to here, right? We'd be moving up. This stall is making me a little questionable. The short-term trend is now down. Again, that rule is 2 boxes, right? It has to go below, not 1. It has to be 2. So once it hit that, then it changes to the short-term trend down. Now the stops are still down here, so we're still long, but it just again, just acting a little sheepish. Whoops. Let's go to the daily chart. Here is the Goog, big, massive down day. 22 days over was a kind of, you missed this low by a day, but just a kind of a ugly, just no follow through, right? So it looks like to me it's heavy, and I believe we'll probably make a new low in Google. Just the way it looks, this shorter term trend. 22 days up, man, that's just nothing. That should have been much higher. Let's move on to Microsoft, MSFT symbol. And you can see this market reacted like I would expect, right? If this is a major low, it had a nice little bang down here and immediately got up. And then we had, of course, a stupid gap, which don't make sense to me. But anyway, we were long here, so we didn't, we beat the gap. But this is the kind of action I expect, right? Now it doesn't, now again, since we went down and banged out a low, I could see Microsoft popping a new high, which I will sell, by the way, not on the system, but on my bear bull trap system I use, if it would do that. So that one's kind of interesting to me. Let's look at the daily. You can see here that's stupid ass gap, and it's supposed to have a great AI system. Well, they're fire the guy who does the AI. That's going to be my bitch from all these companies that have gaps like this. Their AI sucks. Why would you? Don't buy it. They can't even project their own stock correctly. Anyway, 33 over from this 7th, right? Again, May 7th was this one, which was a low, and then we gapped up. But 2000 or 1990 annular, which was a high, is coming in also on that zone. So now again, you can see 99 degrees over is a high as well. So this high that we just had. So again, the sequence is getting long in the tooth. So it definitely, I would love to see a bear trap or a bull trap. Okay, Amazon, AMZN symbol. Again, kind of had a low, a secondary event. Stops are moved under that secondary event now. And we did trickle higher. Again, you would expect it to be much more bullish than that. Obviously, this makes sense. We're on the solar eclipse. Again, we cannot close above it. So again, I could see it poking up to this 1-to-1. and then closing back below the eclipse. It's just acting weak this last. Now this, we did close higher last week. So, and if we do close higher again, that'll be 3 consecutive higher closes, actually 4, counting this one. So again, that's not bearish. So you don't want to just be a out bear, but I think he definitely tells you to maybe sell a little strength into that early next moon period. Let's go to the daily chart. Here is, again, you can see this trend line coming in here. This is not a one-to-one, but you can see that it's kind of a good average. The 7th was here. Here's our other 7th, which kind of missed the low by a day. It did push the market up. So, 66, which completes the matrix sequence, was on this period. That's why the trend line is drawn on there. So normally on a good market, 33 would have been a high. Now again, I'm giving you a lesson on my solar matrix, but 33. Let me pull it up here. 33 off the high should have been a buy, and it was not, right? So that told me that 66 is going to be out of sequence. Now, if this was a buy, then this would be a low. So now it happens to be the opposite, right? Counter cyclical, I guess you call it. So that's kind of important to me that this zone here. Now again, a gap up or down Monday will definitely tell the tale. It don't have to gap, but it seems like that's what it always wants to do, give you the precursor before the actual move. Apple AAPL, it's had some movement, man. It's off my chart, and I need to recalibrate. It takes too long to do it, so I'm too lazy. But man, it's really had some chip and chopper. Not real good for my system. I don't think it's lost money, but it sure hasn't made anything. Even though we've had a pretty good crack down, you can see though, again, short-term trend is down. The stops are here, so we're still okay on our long position, but that's a weak stick. Again, like I said, the only one so far that isn't a weak stick is Microsoft. All the other ones give me a gut impression that we are going down maybe early next week. Looking at the daily chart, again, it gives you a little more visual because I can shrink it down, but a pretty good club. I mean, you got to assume the swing traders are bearish. I mean, there wasn't, any one of these swings that got violated definitely gives you a bad taste in your mouth if you're a bull. Again, if you're an Elliott wave guy, maybe we completed a 5-leg and we're in an ABC kind of mode, and that was our C leg, and now we're on a new leg down. Again, I hate Elliott wave. I cannot trade it. It don't make sense to me because you can change the rules in the middle of the game. But again, we broke the uptrend line, right? Simple stuff. Keep it simple, stupid. KISS. Broke a trend line and down and with a gap, with timing. And again, it was up against the solar almost, right? Which again left the bearish taste in my mouth that we couldn't get up to that. I was hoping to get up into these 2 solar eclipse closes. So anyway, pretty simple stuff. Apple's a trader. I don't think you can buy strength for sure or sell weakness. I think you trade it, right? Use your logic, old sense. Turn off the programs and just look at it, right? Again, this market was 17 over. So again, that was the zone. 16 actually, 17 was the gap. So pretty classic. 22 over, and now we got to go to 33. So that'll be the next zone, which will complete. Now again, maybe complete the matrix. Let's move on to Tesla. And here is the StockMatrix program. Again, just a chipper. We got long on this little bounce, and now it's acting weak stick. I would assume we're definitely going to be finding support here at this eclipse, or maybe lower. Maybe down into here, either Monday or the rest of the week. It makes sense to me. Let's look at the daily. Here is Tesla on a daily chart, and you can see that 2014 was on the 9th, which is right here, was pretty important. It was a major low that reacted off of it, not just a small low. It has to have some reaction. Of course, here is your red dot, which is your 7th. I guess I didn't put it in here, but that's what it is. So anyway, yeah, this one's actually kind of bullish. It's broke out. It had a decent close. So now, of course, there's some news out about Tesla. I mean, I like trading controversy, right? It seems like Tesla is now in controversy, so I like to trade those because the end results are more activity, more movement on the chart, up or down. Again, I'm a bull or a bear. I'm not a one-sided guy. I just try to make money. So I think that's going to be a tale of 2 tapes. If he's coming out with a phone, that'll be interesting. A Tesla phone on the cheap, made in the USA, hopefully. Okay, let's move on. One other thing, this Tesla is kind of trades like a commodity a little bit, and you can see that halfway back is kind of the standard, right? That's your equilibrium. On these kind of commodity more side, I look for more like a 62 percentile, which would be up here. So this would be my short-term target on a bullish pop, breaking out, broke the downtrend line, has a head and shoulders bottom, right? So again, I would think the 62 percentile is my target, and it could happen fairly quickly. We have some stuff coming in here, 99 over on the 14th. So now again, market days. Moving on to Lin, L-I-N, you can see that had a massive bear trap, man, right on timing, 90 degrees over, or 90 calendar days over. Just a massive pop. Now we're in 360 from the low, so you had to be a little careful here. We did not get stopped long. The short-term trend is still down because, again, our 2-box rule needed to get up to here, which, again, so we'll go long. If we get stopped into that position on the long side, it'll also change the short-term to long as well. Now, again, seems like there's a lot of gapping going on, so this one we could get a little worse fill if it gaps above us. And again, I try to calculate that as best I can. And you can see it's just a chop or two long term. Let's take a look at the daily. Here is Lin on the daily basis. It's just a weirdo. I mean, so this top, I loved, right? Three banger top, 3 heads, 3 swings, and then kapoof with a gap, right? So now it went back and tested it, and then poof, fell out of bed, made the bear trap here, made another bear trap here on a massive freaking hammer dog. I don't know why. I mean, I think don't make sense, but it did what it did. Now it's back up into that range, back to the solar. Couldn't quite get back to the solar. So again, it's leaving a little heavy taste in my mouth. This is one that happened on the 8th, not on the 7th. So it's a little different. 22 over was Friday here. So again, it closed a little lower. So again, leaves me a little suspect on where it's going to go. Edison, ED is the symbol. Kind of a bullish coiling pattern here. Stops are above that part of the coil and above the 1-to-1. We're kind of trading on the solar and actually below it a little bit. And you can see here that we have most of our annuals come in the middle, past middle part of May. So we'll have a bunch of stuff coming in. We'll look at that on the daily here in a second. So again, 90 degrees over, which should have been a major high. It was, missed it by a smidge, 1 moon period. So again, now of course we could have taken this one, right? There's 2 of them here. So this becomes 90 degrees over. Again, I mentioned that in one of the videos that you have a hard time being a bull here. Now again, it just made a pause. Maybe we got a whole new leg coming up. I don't know. I don't even know any of the fundamentals here, but it makes sense though. We could break back to this previous solar and maybe even knock this out by a little bit. Maybe even get down to the 1-to-1. That'd be cool with me. Depending on how long it takes to get there. We did square out this range right here, which kind of broke the market. So squaring the range, one of Gann's things too. We won't square out this range, which is off the chart here, but not until, let me get it over here. You can see we square out this range if this high holds on the next solar eclipse, which is in September. So that's kind of going to be interesting to me. Let's look at the daily. Here is the daily chart, and you can see those annulars that I mentioned. They all kind of group together. There's 4 of them within a few days apart. Also 88 days over. So from the low, which is, here's the 13th as well. So 13th will be important. This one actually made the list, not the 7th, but the 9th. So that came in on Friday. Pretty interesting. And here is the 13th one down here. So that's these circular ones. So you can see it's just a coil, right? And we're kind of banging on support from there. But I would say I could see it knocking this out just because it's, these ED, Procter & Gamble, Lin, and actually Apple, all kind of been opposite of the other part of the programs, like NVIDIA, Tesla, Amazon, all the ones, Meta. They've been kind of the safer plays. So when the market gets a little sketchy, when we were on our lows on Meta and down 55%, and Tesla and Adobe was down 60%, this was making a new high. So again, the safe play right now. Once the lows came in, poof, there it went. But so that's interesting. It'll be interesting to see if that trend continues, right? Because that's what the market's telling you it's doing. That's what the professionals are doing anyway. Looking at Adobe, again, kind of a drawn out thing. That was one of the uglier ones on the chart. And we do have a few annulars coming in here, and I'll show you that here in a second on the daily, but we're back to the solar eclipse, which again, this one never did get back to it on the previous one. It was so bearish that it can barely get halfway, not even halfway back to the solar, right? So it makes me kind of less bearish if, if we can get up above here. You can see the 1-to-1s are coming in. on this chart. But again, it's also, the actual low came in a couple moon periods past the solar, which was a full moon. So again, this one is a full moon that we're on right now. We're making a high. So again, I'm a little suspect yet. I don't trust Adobe. Again, Gap and Marty every report. It's like, come on. Going to be my bitch. There's AI people that suck at their job. Fire them. They shouldn't have gaps on a quarterly report. I'm sorry. They should know exactly how much they have if the AI is that freaking smart. Anyway, this is kind of a drawn out deal on the daily. I don't know. It's just kind of a slow creeper. Usually they can keep creeping, or all of a sudden we poof go back down and make a new low. This one's got the gut feeling to me that we could make a new low because it's been so ugly. I guess it was down 48.1% down to the low on the thing, and you squish it down. It's pretty ugly. 50% break. That's pretty serious. I don't care what. Now again, prior to Doge and all that, it had serious breaks before. It's definitely a mover. So these Gap, Gap and Marty, I would have never put it on here if I'd known it Gap this much. It's stupid. But anyway, it is what it is. IBM is another one of those safe plays. IBM is the symbol. Again, it had a weird. Again, IBM has its own AI. Come on, this gap up here is so dumb. It just pisses me off. Anyway, they want to cause those gaps. Only thing that makes sense to me. So be careful, right? If their AI is that freaking stupid, or if they're that smart to create them kind of gaps, they'll create them on both sides. So, and you can see here we had another gap here, intra moon period. So the stops are here, but again, this action makes sense to me, right? This is the kind of action you expect from if it's a low. Let's go to the daily and take a look at it. And again, we do have quite a few annuals. So, we have 4 of them that are pretty important, right? 2024 pivot. Again, to me, what's more important? Especially is it the low, the pivot, or the secondary event? Well, in my research, the pivots are just as important as the secondary event. So that's why I keep track of the pivots. Because now when it's a triple bottom, it's the middle one always, right? That's basically your pivot. So anyway, got sidetracked here. You can see we had some zones coming in today. So this gap down was a little concerning. We're back to this, again, solar eclipse will be support logically tomorrow or Monday. And really not much to report. The 7th, which again, and this is the red dot to represent the 7th. Again, missed the high by a day, coming into this next zone. So pretty classic. But the up is just not enough. This popping out the high almost looks like a bull trap. I don't know. I don't like it. I'm confused a little bit on whether this is going to continue. For the bears, fuel for the bears is we did have the 3-prong high, which I like, and of course, end result was a smash. So now we have an ABC kind of correction. I don't know. It's just a sloppy deal. Let's look at a monthly once on the. Yeah, you can see it has these long pokes and long bears. Good poke and a long bear. 10 years almost trades like a commodity. That's a 8-year, 10 years of chopping down. This was only 08 to 2000. So that's 4 years, 4 years that it had a bull and 10 years of down. So if this is the low, here's your 4th year, right? And go 5th. So again, of course, it could be here. It could be 2028, right? I guess, but it just acts like it's done. This action, the new monthly low is concerning, but then we made a new monthly high, right? So it's like, oh, geez, I don't know. Let's look at a weekly. Yeah. You can see it's just. I guess if it's going to go up, it probably, again, you can see you make new highs, it goes down. Make new highs. Now this one took a bit. 1, 2, 3, 4, 5, 6, 7, 8 weeks, and then it finally broke. This one popped it out and had a 4-week break. This one had a high 2 weeks later. It popped new high, pop doom. I don't know. I guess I'm kind of looking at it and I'm just confused. So usually that's a good sign to stay out. Options only for sure. BK, Bank of Magellan, New York Bank, old company. That's why I liked it. And you can see we had a nice reaction. This one the safe plays, but it had a bearish reaction once the other lows came in. Now we're going back up, and we're kind of in the cardinal cross, Gann used to call it, right? But this is a pretty important zone between the 1-to-1 crossing zones. So now this one was a solar eclipse from projecting. From this solar eclipse close to this solar eclipse close, the 1-to-1 project, right? So it does work. Went back to this low was actually the previous solar eclipse. So the eclipses are pretty active. So, and again, we had that 3-prong high and then poof, let's go to the daily. You can see that we're kind of holding on. it's acting a little more bullish than some, so that's encouraging. We keep having higher closes. Um, everyone's been a higher close except for everyone except for that one maybe. Looks like everyone's been a higher close. Uh, yeah, even that one. So that's friendly, right? That means I feel like we're going to probably pop the top, which I'll be probably selling on my program, not the StockMatrix program. I don't care about that, but we have no annuals really. Maybe one in the 16th of May, and that's it. The 7th already came in, which was 2009. Which matched up this, which gave it a gap. So this is an important little area for risk management if you're trading the actual stock. Is this low here? Now that's also the solar eclipse, so makes sense a little bit. You give it a little more room than the actual low to get it below this. At least the solar eclipse low that day was 82.48. So if you're trading and having stops put in, it has to be below 82.40 or something. PG, Procter & Gamble, chopper of choppers. It's a safer play. I don't know about their dividend. I'm assuming it's probably pretty good. They have a lot of products, so it keeps it stable. But my gosh, it's been an easy trading. As long as you don't get too one-sided, and just trade the new lows and trade the new highs if they come. A lot of traps slinging around. You can see it's not good for a system. Now, unless your system trades chops. Now, mine's trying to catch that bull trend, right? Or bear trend, either one. I want to catch that dynamic move and take small profits, small losses when it chops. You can see we kind of squared out this range. It'll be next period. So again, I could see it trying to make a new low, be down in here somewhere to square it out. Stops are up here, so they won't get moved down just a little bit, but still a little more manageable every time. Let's look at the daily. Here's the daily. You can see we pretty quiet in the annular section. We did have one the 3rd, which you see there, and the 13th and the 17th. So we do have a few coming up, and that's it. It's pretty quiet, and they're all older, right? They're not current, like last 5 years. So, which again, to me, a little less credence, a little less power. But you can see we did have a gap here down, which again is probably the target. Makes sense, and the previous solar eclipse. So I could see it going back up and fill this uncovered close, maybe even get back to the solar. If it's a struggler though, then it tells me that it's probably going to pop out low. This is an ugly chart. This reaction here and no bounce, it's definitely going to make a new low. The question is it going to stop, or is that the high and we're down into some new bearish market on Procter & Gamble? Now again, I don't know anything about the dividend. It's probably worth holding if you got a pretty decent dividend. But again, I don't know. I don't like it. This looks like a high to me. Let's look at a monthly. You can see from one of my previous videos, I gave it that. I mean, what the heck? That's just an ugly chart. Last corrections are in time, definitely. Again, this is a monthly, so you're talking at least a year break. So, and we're on month 2, maybe 6, right? If you take this high. JPM, JP Morgan, the diamond. I just kind of like this chart. It just keeps creeping. It's above the solar. It's above the solar range even. And I know it had a little softer close. We're getting close though to this 1-to-1, so I could see it either this week or next. Somewhere in there is kind of my target. Now again, this 1-to-1 coming off the lows is pretty key. So I don't know. This poke low and the reaction is what you want to see from a leader of the markets, not a dog, not a pooch. Let's take a look at the daily. Again, we're above the solar eclipse high of the sequence, above the range, which now is support, right? So you buy the breakdown into that. 22 days over from that event was this high. 33 will be the next sequence. Now we are coming 33, which again, this one's already gone. I'm going to delete that one because we made a new high. So again, just a nice creeper. Those creepers though concern me a little bit. Again, we haven't had a decent enough dip, no secondary events. Makes sense that you could see it maybe break back into here somewhere on JP Morgan. Coinbase, a pretty serious break. It had the bear trap down here. I believe a 60% break. So that's pretty serious. Now, in opposite, if you look at it from the other direction, that'd be 150%. So, 60% is a big deal. Again, I could see it the way where it's at now. I could see it breaking back into here. I could actually see it maybe getting down into here next week. Hopefully not stopping us out. But if it does, it does. System don't care. We have a couple annuals, all of them in the mid part of the deal, which we'll look at here on the daily. You can see they're smattered in there, all those. So again, old lows become highs. Anyway, outside day kind of had a trap. I didn't even catch that. I would have probably traded that. But that trap concerns me a little bit, especially if it follows through the downside. 22 was missed that high by a day, was the highest close. Now 33 is your next event, and makes sense a little bit that that one of these, one of the ones are probably going to be the next trend down. It's kind of a weak rally, right? I mean, you had the 60%, 59.1% hammer dog, and this little back rally. I mean, it's just a week. Let me see how many percentage it was back. It was 50%. So you had again 59, 60% down here and 50% back. So again, logically, you could go up 59%. There is 59.1. Whoops. Well, you get the point. This would be kind of the projection area if it's an exact percentage correction back up. Now again, that's, you can just see how percentages can screw you up. Oh, I made 50% back, but you just gave up 60% to the downside, which is 150% the other way, right? So anyway, it's just important. We got some zones in here that definitely has kind of curbed the appetite a little bit. Next one there, and I'm going to just fill these out so they're done. And that one won't come in until June. Okay. Moving on to last but not least, CTAS. One of the BlackRock crew. It's a fire extinguisher and laundry company. Been around a long time. One of the older ones, actually. It predated the actual stock market, the original company. Anyway, that's why a lot of people like it. It's stable, even though, again, they're out there now protecting their stock price, firing people, not paying them to make sure they get their bonuses. I just hate that. I personally would never invest in a company that would fire their people to keep their stock up, because again, your employees are your number one asset and expense, but they're an asset. So, especially some of these companies are going to pay the price when all these new jobs come out because of Trump's, plan. I think you're going to see a lot of employees, new positions coming about, and since CTAS doesn't honor their employees, the employees aren't going to honor them. They'll move on in a heartbeat. Some of these guys didn't get paid their bonuses on time. So just because they make their stock look better. Well, John Deere's the same way. They do the same. They fire their people and they lay them off just so to keep their stock up. And I know they have a fiduciary responsibility. I think that should be outlawed if they're just trying to protect their stock. Again, the bonus structure, the whole thing's a mess. And they'll pay the price. So the CTAS is one of these that, they had a stock split here, and poof, it dropped 20% after the stock split. Companies, again, there's no honor in this company, so all the employees took their stock split and took it out the door. Anyway, you can see we're above, though, the solar. It's a creeper, and if you followed me, I believe this is probably going to make a new high. Like a lot of these that have this quick smash, I think, and again, it's proven in history. Let's look at the daily. Yeah, you can see it again. It's just a creeper. It takes a while though. Once you get these smashes, a year later or so, you make a new high and just keep creeping. It's just how it is. So again, I think we're in that mode, just in a different frame and price. But the 20% down definitely got them spooked. So again, I think you're having, again, it had a freaking massive move. The stops never got hit all the way up on my system on the StockMatrix program, and then it finally got hit here and made 20 grand to the short side. So again, it had a massive move. Probably 100, 200 grand move prior to we started on January 6th was right here. But, which we sold it on the low, but then turned around and made money. So again, but it makes sense a little bit that it's going to slow down a little bit, catch its breath. The annuals we have, interesting about CTAS, it's an old company, man. One of the oldest. It has no annuals between January 1st and February 17th. December 30th, there's one. Just no annuals. It's just a weird thing. I don't know why I bring that up, because every time I look at the annuals, I go, wow. We do have a couple in here in May, one in June, so pretty quiet in the annular events, but we do have several of these lows to trade off of, and several highs. Actually, you could probably add this one in the mix too, which is the 11th. But anyway, 26s. So, and the 7th, which we had here, which missed the high by a day, and the 2nd, which was one of these lows. Now again, which one's more important? I don't know. You pick. So anyway, that's CTAS. Let's go quickly. I want to look at some of the futures. Here's the E-mini S&P. Again, we're riding about 3% down for the year, and which is nothing, by the way. Here's the Dow. It is currently down 3-4% for the year. Again, 22 days over from there. It was this high, so again, pretty interesting. Again, that's the matrix sequence. The NASDAQ E-mini, that's down 5% for the year, back about a little past halfway. I wonder if that's 62%. No, it's actually above that. So a little more than just a corrective move, right? Corrective move might have stopped in here. This is a little more serious. It gives the guys something to contemplate. Again, if this is a high, and this move up was a corrective move, this is leg one, this is leg two, 3, 4, 5, right? It could be a long-term bear in place. Now again, I don't know. I don't care. System don't care about that. That's the nice thing about the system. They don't get scared. Here's the QQQ. Again, you can see I've got a lot of the stuff plugged in. This is the matrix sequence off the lows and off the highs, and it kind of gels. So 44 is 11, 55 is 22. So again, these are doubly important. This correction was mathematical. So again, the next zone is 55, which was this high, so which was 22 off the low, 33, and 66 will be their next one, which is May 23rd-ish. Yeah, 23rd. So getting close to the Labor Day event, holiday. 33 from the solar comes in here as well. So again, you can see I drew this trend line in from 44 to 44. Kind of interesting. I want to look at a few other charts. I'm going to put you on hold here. Hang on. I'm going to go to gold. This is a solar eclipse, and I'm going to move through gold. And how you notice this is an active bull, right? And I'm just kind of dragging it through day by day. You can see the activity is punishing the bears at every step. Here you thought, oh, it's over. It's broke the trend. Hammered. And all of a sudden it stops, and then kind of continues, and it gets and then all of a sudden it just coils up, and then there you go again, right? So again, this is a pretty bullish sequence in gold. And I just wanted to bring that up because to me that's incredible. Let's look at a monthly.
Refresh finished.
Yeah, what a freaking monthly. Wow. Now this is a spot, so again, spots are kind of weird. But man, you can see, the gold tends to go in 10 to 12 year cycles. So again, pretty short-lived bears, only 5 years. And then here we go, right? So this was a weird one, kind of a pause. But man, that pause caused this reaction. So, $200 an ounce back in the 2000s. I brought up a gold platinum side-by-side chart. Platinum used to be higher than gold all the time, 2 to 1 actually. And now you can see, again, you got to stay with that dynamic market. I don't care if it's in the stocks or commodities or the Bitcoin versus a crypto. You go with the best. Don't go with the worst. Don't go with the cheapest. Platinum is one of those deals. People are caught thinking, oh, it should be, and here you are going through and, kind of crinkled right there, but that was the end. Gold just started going up from there, and platinum stayed quiet. It's like people going, oh, gold, or going with an ETF and gold miner stock and shit. Well, them things haven't made new highs, and gold's continued making new highs. So again, go with your what's the best, not what is the worst or cheapest. All right, I'll let you go. Thank you, and have a great rest of your week, and I hope you have a good next week too.